please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Free fall on the rupee continues. The rupee has breached the 72 mark for the first time, and it's the velocity of the fall that has started worrying a lot of people, and that's shaken the market confidence. Just last week we were at sub 70 and now we've come down to 72. In fact, the rupee has been falling consecutively for the last 6 or 7 trading sessions, and this morning, in fact, Lata was telling us how there is largely stability for the emerging market currencies. So the fall in the Indian market seemed to be linked to us itself. So that's the big headline. The rupee has breached the 72 mark against the dollar for the first time ever, and it's the velocity of the fall which has gotten people a bit anxious now and a bit worried. Just look at the way the rupee has collapsed just in a matter of moments. It was hovering around 71.9 and now we're suddenly talking about 72.05. So it's a 15 paise fall in the rupee just in a matter of moments. There has been pretty up until now at least a hands-off approach from the Reserve Bank of India, and the government statements which have come through have indicated that they want the rupee to find its fair value. Let's go across to Lata. Lata, just look at the way in 5 minutes the rupee has fallen about 10-15 paise.
I think we should pull up other currencies and more importantly the dollar index and crude. This could be in response. Now it's climbing now to 72.05. See, this is typically the London opening time. So there could be fresh dollar purchases because somebody is winding down long orders. Well, the dollar moved up a little bit. If you remember, in the morning, dollar was at 95, dollar index 95, and it even went to 94.95 and 98. So the dollar index has clearly shot up, and that itself is emerging markets negative. I just want to put a few things on the table. One, rupee was an extremely strong and well-bid currency from, say, February to July, when crude was falling from $80, almost 79, to we saw it go almost to 72 or 71. And that was the time when Indian earnings were improving. The fourth quarter and the Q1 earnings were. So India was such a good bet at that time that people just piled on long positions, hedge funds. And then everything kind of went berserk when externally the lira and peso and the other contagion started for the emerging markets. It coincided with our August trade deficit coming in, which was in mid-August. We got the number, the July trade deficit, which was an kind of earth-shattering $18 billion. That meant a current account deficit probably of around 3%. It kind of coincided like a perfect storm. Just as long positions on the rupee piled like never before, you had a situation where emerging markets were first in trouble. Our own trade deficit was a scary number. And then, everything started unraveling together. Now for the fall, the Reserve Bank and the government realized that, you just have to allow it to fall, to adjust so that imports become expensive, exports become attractive, and the deficit naturally over a few months adjusts. But the point is, at what level do you stop? This is a slippery slope. Once it starts falling, and even sometimes small lots can take, bid the currency lower and lower. Now what bankers are watching out for is, when will the government stop saying that they are comfortable with the currency fall? The more you say that, this is a welcome adjustment, the more somebody will short it, and shorting itself will become an advantage. What is the right number is always difficult to say. It's a moving target. We have indicators like RER, the real effective exchange rate, which is a 36 country trade-weighted basket against which you measure our currency. But all these are at best signposts. Unless there is something strong in terms of a physical support coming from the Reserve Bank, this could be a slippery slope. And I think at the moment, someone seems to have taken 72.15 as a place to even sell the dollar. So we are seeing some bit of stoppage of this peak of this sudden spike that we saw.
In fact, Lata, we've got Anand Narayan also with us on the phone line.
And I think Bhaskar Panda is also there. Bhaskar, I think you must be at your trading desk now. What caused this sudden spike in the dollar?
No, I think there was, stoppage, by whom. And once you stop it, then coming to the market, then it just spots. So that is the practical news of it. Second thing is that, right now people are nobody is talking about except me probably, there will be some retracement. So I have been saying this, but nothing is happening. So that is something I don't know.
Were public sector banks selling dollars at any point today?
I think they were selling,
Okay.
if I could say. So there was.
Okay.
Otherwise, it would have been at 72 even in the morning itself.
Okay, so there was a supply of dollars, but what caused this last 10-minute fall in the, I mean, is there some big purchase going on? People talk of defense or oil payment or, you know, some 2-3 days back it was MSCI rebalancing. Is there any external demand that came in for the dollar?
No, I didn't see any external too much demand coming. I mean, see, oil and all those things are regular. So they keep on coming and they keep on buying. So that's a regular phenomenon. So I have not seen any or not heard any large payments going through. So this fall was something like, you know, waiting to happen, and it happened just when, you know, people are not looking at it. That is my sense.
Okay. Well, Bhaskar, do stay on. Anant Narayan has also joined us. Anant, good morning. This is, one would have thought at 72 it's well adjusted. What's keeping it slipping lower and lower?
Good afternoon, Lata. Yeah, the excitement doesn't abate. I think you covered it very well earlier when you described the challenges that RBI faces. I think the current level and what we are seeing happening in the rupee is a controlled move by the RBI. Now, the problem with the RBI trying to control the rupee is exactly as you described. It can be a slippery slope. You can see demand coming through from people who are unhedged. And this time around, the demand seems to be coming from local players. So both Friday evening as well as you know, later in the New York time and Singapore time, actually NDF markets were reasonably well behaved. It's only when our own markets opened that the demand suddenly shot up again. So it looks like, make no mistake, RBI has plenty of reserves to manage short-term moves in the rupee. You know, where the rupee settles eventually will depend upon the RBI. And that is a hazardous task of trying to guess where the RBI will come in. But I do think they will come in here. I tend to agree with Bhaskar. Uncontrolled fall of the rupee is not desirable neither for trade and capital flows nor for sentiment. So at some stage, RBI will draw the line. Earlier, they drew the line, if you remember, at 69. And they defended it vigorously with $25 billion of intervention. I think post-Turkey and you know, other geopolitical events are coming through. They've moved the line a little back, but it's a tactical retreat rather than an actual free fall. And I think RBI will come and hold it at a particular point in time. But, you know, the larger issues remain. We do have, you know, broader financial stability issues that we need to address. RBI has plenty of reserves to buy us time. Within that time that it buys us, we have to address those issues.
Okay. Bhaskar, I just wanted to ask you, how were the other currencies moving? We saw the dollar index go from slightly sub 95 to 95.16. Have the other Asian currencies also responded, or are we an outlier today?
No, we have been outlier for quite some time now, even if you compare with, say, Indonesian rupiah, which has been in the same kind of trouble like us. But if you take from January onwards, I think we have been outlier this year, definitely. I am yet to find a real story why we have been outlier. However, having said that, if you go back, I mean, if you see the longer term, you know, movement in all these currencies, which has suffered so much in the past also. So from 2011 onwards, I was looking at the chart. I think we have been almost in the you know, a higher quadrant
of depreciation.
Yeah. So that can be one of the reasons, but today's movement is something which is, you know, is a continuing, you know, pessimistic view that we keep on.
You know, one point which bankers made over the past couple of days is that what I was just saying, that somebody from government or RBI needs to talk. It's not just the support that comes in the way of sale of dollars. Yesterday, the finance minister was pretty calm and said that, you know, we are falling for global reasons. He didn't sound worried. Their point was that if someone says that, you know, we will go all out to support our financial stability or our macroeconomic stability, some statement that obliquely says that we won't let you know, the rupee go downhill, some talk of support is what is needed. Would you say that is needed, and has the time come for that?
I think that is needed at any point of time when there is huge volatility and when there is, market is betting against a currency. So that is definitely, that would help the markets, sentiment at least. And that will also quell the, way people are pessimistic about the rupee right now. So probably that could help, yes.
Okay.
That would.
Well, what would your view be, Anant? Every banker says the same thing. Somebody from government or RBI has to talk up and say that enough is enough and, we have the strength and we are not like any other currency. Do you think it needs to be talked now?
It's a tricky one, Lata. So to start with, RBI doesn't talk.
Yes.
And Delhi doesn't stop talking. Neither of which is helpful, to be honest.
Okay.
But, on should RBI stand up and say something right now? Frankly, I like the point about them intervening and doing more and talking less. We've seen other central banks, for instance, Indonesia, which has done all the right things by the textbook, orthodox, intervention and verbal intervention. And it has seen a lot of sell-off as well.
Yes.
So sometimes, talking at a time when you're not used to talking can be seen as a sign of weakness.
Okay.
So it's a tricky line. So what I would, probably expect and hope is that RBI should do the talking, not Delhi at all. Currency is in the matter of is a problem of RBI, at least in the short run. And maybe in a speech or in response to a question after the next policy press conference, give a broad statement saying exactly what you're saying, that rupee is different, we have plenty of reserves. Yes, we have some financial stability issues, but they're not unresolvable, and they can be addressed, and we will address them over time. I think that's a little more helpful. But yes, what wasn't helpful over the last few weeks and months, talk about 80 and, people making all sorts of comments. So that is completely uncalled for, especially at a time when Bombay is not talking. It's a kind of a tricky situation. So it's a tricky one. You don't want to sound panicky. You don't want to announce special schemes for oil demand or for... Because, you have reserves right now.
Yeah.
You first exhaust that before you do that.
But Anant, have you done... I know RER is not the best of indexes. Nevertheless, at 72, do you think it's fallen enough and... there is a natural correction of the trade deficit that will be in order because imports will become expensive and exports will become attractive. So maybe in a couple of months, are we already at the right currency level to correct the deficit? Anant? Okay, I think we'll have to redial to Anant. Bhaskar, do you all have an internal calculation? Have we, adjusted on RER terms enough, or are we still overvalued? Okay, something wrong. Either I have lost my hearing or something is wrong with the talkbacks. Okay, I think we'll fix that. It's always difficult to check out at what point, we have depreciated enough. Anant, I'll just repeat my question. Do you think rupee has depreciated enough for it to be reasonably valued in RER terms?
Look, Lata, you and I both know RER is a medium-term metric. We can't manage daily movements based on RER. So current RER, I presume, would be about 111 for what it matters. Look, ultimately, it's a judgment call that the RBI has to take. As I said, RBI has plenty of reserves right now to manage the rupee. This is not a free fall. The RBI has ammunition to manage stuff. It's not like 2013 where the reserves felt inadequate to manage the outflows. Right? Yes. That's not the case at all. Now, at 72, RBI has to take the call. Does our current account now improve over time, such that our basic core balance starts to improve and not become such a drag on the rupee, right? Yeah. And now against that, it has to juxtapose if you allow further fall, if you allow, let's say, RER to adjust to 105, and therefore allow rupee to go up to 73, 74, 75, that will obviously raise a lot of issues, and short-term sharp movements are rarely helpful.
Yes.
And plus, it sets up a panic. So if it's a call that RBI has to take, and unfortunately they don't have a documented, intervention policy which we can compare against. Yeah. But if I was in the RBI shoes right now, yes, we've seen a move of the line from 69 to 72. I think it's a good time to come in and intervene strongly. You don't want panic setting in unnecessarily.
Yes.
Use the reserves. It's okay if we expend a bit of the reserves. Don't let panic set in. But make it clear that in the time that RBI can intervene and buy us time, certain, basic issues have to be addressed. Okay. The issues faced by our exporters, the nature of our flows, the banking sector health, the fiscal deficit situation, all of that has to be, addressed over the next few months. Okay. RBI can buy us time.
Okay. But as you say, the currency will perhaps bridge the deficit this much. Do you think the government has to come with some things in terms of import controls or in terms of export packages?
So look, the basic math looks as the following, Lata. Our current account deficit will be, let's say $85 billion this year, or let's call it $80 billion, right? And let's say FDI is going to be $35 billion, which means our basic deficit is going to be in the nature of between $45 billion or so, about $4 billion a month.
Yes.
Now, what is the other worst thing which could happen? We know an overhang of unhedged exposures. Importers have not covered, exporters have sold, FPI in debt, NRE deposits. All of that can reverse out, and some of it can reverse out. So let's say another $40-50 billion of that can go out. Even in the worst case, that's about $80-90 billion.
Yes.
And starting from a time when our reserves are $425 billion.
Yep.
So, we have plenty of reserves to manage. And yes, we will see headlines, we will see people panicking and all of that. But RBI can easily manage those kind of outflows and buy us a few months, if not a year.
Okay.
Now, what the government should be doing, there is hopefully the adjustment in the rupee should itself help the current account.
Yes.
But beyond that, we know there are issues in exports. There are enough number of commentators who have talked about issues dogging exports, the ease of doing business. Why is it that ready-made garments is moving out to Bangladesh and to Vietnam rather than some other time?
Yep.
Coming to us. So those issues have to be addressed.
Okay.
Likewise, Make in India is great. Let's make it work. Make in India for India should happen as well.
Yeah.
Why are we importing so much of smartphones?
Yep.
Why are we importing so many other manufactured products? Those things which will take time have to be addressed.
I can tell you a little something which will put this in perspective separately. I mean, separate from what Anant is saying. Other currencies have also depreciated, so this does look like a dollar strength story rather than only a rupee weakness story. The Filipino peso in the morning was actually stable. It was even appreciating a wee bit, and now it is depreciated by 0.25%, 0.27 down. Singapore dollar 0.11 down. The rupiah is still stable, but then it's quite possible it's not a very deep market. And the ringgit also is, I think, flat. I don't see any rate on my screen, at least. The lira, I think, is open for trading, and that's also depreciating a bit. We have Koon Go joining us. Koon, should you say that India's the rupee falling to 72 is part of an emerging market currency fall, or are we becoming outliers?
This is definitely part of what's happening to EM markets generally. Sentiment by foreign investors towards EM is quite poor at this point in time, given concerns around Turkey and Argentina. And even though India's fundamentals are nowhere near as bad as those countries, the reality is that investors are scrutinizing countries that run current account deficits. And India, with its deficit set to widen in the near term, is part of the reason why we've seen lackluster FPI flows, and that's contributing to the weakness that we've seen in the rupee.
But, I mean, how long will we go with this explanation of EM crisis? Crises do abate. Currency crises don't go on and on for months. Don't you think, or are you getting a sense that the crisis is anyway near abating?
This is a very difficult question to answer. Ultimately, it revolves around confidence, and certainly there is a lack of investor confidence towards EM generally at this point in time. Quite what the circuit breaker is, I think is difficult to say. I mean, if you look back at the 2013 taper tantrum episode, for example, part of the circuit breaker, apart from the RBI hiking interest rates aggressively, was the U.S. Federal Reserve turning a little bit more dovish, following the comments from Ben Bernanke. This time around, we are expecting the U.S. Federal Reserve to hike rates this month and follow up with another rate hike in December. And the focus will be on whether or not the Fed feels compelled to carry through with the tightening cycle next year. And really, that's the crux for EM, how long this current sell-off can persist, partly rests on the U.S. Federal Reserve.
Okay. On the rupee itself, where do you see some semblance of equilibrium coming in? Should it have come at 72, or do you think it can overshoot?
Yeah, so when we look at what is fair value for the rupee, our estimation puts it at around 73. So even at current levels, even though it's at record lows against the dollar, we feel that the rupee is still somewhat on the overvalued side. Okay. And I guess the risk is that even if we get to 73, if sentiment remains poor, we could get into a little bit of an overshoot territory.
Oh, right. Okay, thank you very much. That's yet another perspective coming in. Emerging market crisis has not abated, and there are people who are looking at lower values for the rupee as well. Anant, Bhaskar and Koongo, thank you very much for joining us in this conversation. Well, we should be prepared because global emerging market crisis quite clearly is still continuing.
Yes, absolutely. And this 5% fall in the rupee in a span of 1 week has shaken the confidence of the market. Let's pull up the intraday chart of the market, of the Nifty as well. It's fallen about 50 points in a matter of moments right now. The key level to track on the rupee will be yesterday's level, intraday low, which was 11,400 thereabouts. So we're still holding above that level. But as you can see, we're off from the morning high, and weakness is seen in oil marketing companies, IOC, HPCL, BPCL. Reliance Industries is weaker in trade. Corporate sector banks like Yes Bank too have seen quite a bit of a fall.